very, very well. Now, Thyrocare is the next company that is on our radar. There's some news flow there as well. But of course, when we talk about diagnostic companies, there is the overall environment that I think is also a fair bit in focus. We have Rahul Guha, Managing Director and CEO at Thyrocare, now joining us to take some questions there. Rahul, good to have you with us here. Good afternoon. Thanks very much for your time. Prashant this side.
Hi,
Hi. Tell us a little bit about, where things like competitive intensity, etc., are in the sector right now. Is it on the mend? Is it, where is it from all-time high intensity? Where are we at now?
I think, thanks, Prashant. And overall, I think if you look at, the players that had entered the diagnostic space a year and a half ago, I think they're still all there. So I think the amount of competition has not come down, but I do see that price as a basis of competition has come down. Almost everyone is now focusing on experience, turnaround time, quality testing, and less so about discounting and so on. As I shared earlier also, our largest customer is PharmEasy, which is a sister concern. And even on PharmEasy, discounting has come down substantially for diagnostics. You would have seen it in our last quarter numbers, year on year, the price has gone up by almost 18%. And I think that's true for almost all online players.
In fact, yes, on a quarter-on-quarter basis, right? That was my next question, actually. So given that, discounting has come down, pricing pressures perhaps not as bad as what it was a year ago, and you're now sitting on almost 25% margins in the quarter gone by. Can you tell us that what is a sustainable margin picture for the company? Because there's still a lot of, competition is quite high, although discounting has come down. So can you hold on to this 25% level, or do you think that, it may get back to that 18-19% earlier?
I won't give specific guidance for the quarter, but what I have said for the year is, just so you know, the 25% margin is after the ESOPs charges, which every year we normalize. So our normalized EBITDA is in the 30 range. And I've been saying for the year that we should be within that range when you look at normalized level. In fact, our EBITDA, because the ESOP charges will start to come down, will probably improve over the year. But our normalized EBITDA, we hope to keep steady over this year.
So the reason I ask you is because, a lot of these smaller players are still very aggressive, right, to gain market share and to penetrate the market in a big way, whether it's NetMeds, whether it's Healthians. What are you doing to combat this kind of competition?
So as I've said, the competition in diagnostics has largely been in the metro and tier 1 areas. So if you look at many of the players that you mentioned, their presence actually is limited to the top 5 cities, maybe 10 cities in the country. Less than 20% of Thyrocare's business comes from metro tier 1. We are actually much more predominantly tier 2 and beyond. And we continue to aggressively expand into the next part of the country and ensure that affordable, good quality diagnostics is available in tier 2, tier 3 markets. And we've been able to see a good tailwinds with that strategy.
Rahul, just a couple of points. One, what is the network, the overall franchisee network at right now in terms of numbers, and how is that, where should that be, where will that be by the end of the year? If you can run us through what's the game plan. Second is, when we speak with other companies, bundled sort of test packages, right? I think you've also launched a product called Janch and a few others as well. What does that do to overall pricing? Does it again kind of subsidize? Is it a indirect hidden subsidy in that sense, or not really? Go on.
Sure, I'll take both the questions one at a time. I think the Janch or the bundled packages point, it's not exactly cannibalization in that way. It allows you to create packages of multiple tests that are targeted to a specific therapy or a specific disease state, and therefore in a way is more a strategy to upsell rather than bundle and cannibalize the business. So I feel that should be, as more and more people start to look at the bundling of tests for specific diseases and all of that, actually you should see an upsell average order value increase. As you know, in diagnostics, whether it is one test or 5 tests, actually, the fixed cost is kind of the same. The only incremental cost that comes out is the reagent cost for every additional test. So you should see an increase in average order value and therefore a better realization as well.
What about the on franchisee? What are you doing?
We closed last year at 7,488 actively transacting franchisees. Typically, on a monthly basis, we add between 50 to 100. So we should end next year, I think, north of 8,000.
Okay, north of 8,000. Got it. So this on the Janch business, right? I just wanted to understand. Earlier I think at the conference call you had said that you are doing 70 lakhs of monthly business as far as Janch is concerned. Is that still the run rate, and is that something that you hope to scale up, or do you think it would be in this ballpark itself?
No, I think our aspiration is Janch will get to about 5% of our total business. So, 2 crores, 2.5 crores a month is what I would be happy at. We're tracking well against that in this quarter as well.
Okay, so you're saying this preventive testing market, this lifestyle challenges market, right? I mean, that's pretty much what Janch is. I think it includes, preventive testing for cancer, cardiac, etc. So is that a space that is growing quite a bit? Because that seems to be, the narrative, at least in the last 1 year. And what kind of overall opportunity do you see here in the medium term?
Yeah, so we had our flagship product, which has been Arogyam, which is largely annual health checkup, right? So that is typically once a year people do it, typically at the end of the financial year to do a full health checkup. But we found in our research, there are multiple patients who suffer from chronic diseases that require testing on a regular basis, or people who are worried that they might have something serious. For example, our Janch fever allows you to test for malaria, dengue, and all infectious disease in one test. So that that, when you're taking a medicine, you're taking it for the right root cause. And we found that many patients and consumers are taking healthcare into their own hands, whether they're worried about something or whether they're part of a chronic disease that requires regular testing. And so these kind of packages move away from the annual health checkup paradigm and really are targeted towards specific needs of patients, depending on what they're worried about.
No, got it. Rahul, just one last point. I think in the first quarter, you had recovered some dues from the Maharashtra government. This was for the COVID period. But there was some balance left, I think about 15 crores or so. Have you received it? Or
I think
you expect... Sorry, go on.
Yeah, we had recovered almost all our Maharashtra dues except for what we had provided for. And that was provided because, the testing had been delayed beyond the standing SOP. So I don't expect any further payments to come in from the Maharashtra government. We have submitted our application for, the evaluation of where we believe we have submitted the tests on time and so on. But we, at least as per what we have provisioned in our books or what was receivable in our books, net of provisions, we have received all our money.
All right, got it. Thanks very much, Rahul. We'll leave it there. Appreciate you joining in, and good speaking with you here on CNBC-TV18. That's the management of Thyrocare, Rahul Guha, Managing Director at the company. Well, the Nifty is down, what,